Welcome to Metals Investors Forum. My name is Brian Leni. I'm the editor of Junior Stock Review. Today with me I have Ewan Webster. He's CEO of Thesis Gold, a company within my personal portfolio and covered in my newsletter. Ewan, it's great that you were able to present with us today. Thank you very much for doing that. Why don't we start off with a recap of 2024 and what happened with Thesis, and then we'll lead into what 2025 is going to look like.
Right. Yeah. Thanks, Brian. Thanks for having me. So 2024 was a pretty transformative year for us. I mean, I think it really started off in February with the appointment of Bill Lytle. He joined the team as chairman. He's currently the COO of B2 Gold, and has that pedigree of having built all of their mines over the last 25 years. So I mean, instrumental addition to the team. Followed that up with some great drill results from the 2023 season, and really that led into a new resource across both projects for the first time. And it was 4.7 million ounces at about 1.5 grams. 4 million of that was measured and indicated as well. So just a lot of confidence in that resource. And then I used to get a lot of questions around, well, you've got two different projects and they're different mineralizing systems, metallurgy wise, like how does that work? And I think we've definitely demonstrated that not only does it work, but they're kind of complementary to one another with the flow sheet that we now have with 95% recovery in gold and 92% for silver. So really strong metallurgical results, and basically the resource plus the network all fed into a new PEA on the project where looking at both an open pit and underground scenario, and the project economics on that are just brilliant. I mean, at 1930 gold and 24 silver, so pretty conservative. It was an after-tax NPV of 1.3 billion, 35% IRR with a 2-year payback, and a very reasonable kind of 600 million capex. So production profile looking at just 215,000 ounces a year, and with a project in a fantastic jurisdiction. So 2024, phenomenal year for Thesis.
Right, and so like that size really does separate you from a number, especially when you want to narrow it down to what I would call tier 1 jurisdictions. Now, there's risk wherever you go in this world.
Yeah.
But generally speaking, rule of law, ownership, Canada, parts of the U.S., probably parts of Europe, these are tier 1 jurisdictions. Australia. Yeah. When you start narrowing down that production profile, there just isn't a lot of companies of choice when you get to 200,000 ounces. So it definitely narrows in. In terms of, we're saying that it's big, but is there exploration upside? Like, could this actually get bigger?
Yeah, I mean, I think 5 million, basically 5 million ounces that we have just now is the kind of base case scenario.
Right.
And I think really the lawyers' deposits are open at depth, but we're not going to focus on expanding that too much because, I mean, right now we're from surface down to 550 vertical meters, and I think until we put a decline in there, we're just going to leave that upside alone, but it is there. And the near surface higher grade potential at Ranch is really the easy upside, where not only do all the resource zones remain open for growth, but we've got a number of probably 20 plus targets that have never been drill tested that look the same as the known zones. Tested a couple of those last year, made a new discovery on one of them at the ring zone. Looking forward to getting back in and following up on that next year. So but at Ranch as well, those deposits are within this huge alteration system, and we've really just scratched the surface of that. It's a big structurally controlled epithermal field. And if you look at analogs in South America where these systems are typically better preserved, there's a really good correlation between the gold endowment and the size of the alteration system. And at 40 square kilometers is huge. And I've been saying this for a long time, but I mean, as well, the high sulfidation systems are the upper parts of the porphyry environment. So, the blue sky to increasing that 5 million ounce base with the gold is, Ranch, but in addition to that, we also have this porphyry potential where we've got a couple of strong targets that we're probably going to test this summer as well.
Right. And especially with some of the results we've seen in the surrounding area, and porphyries come in clusters.
Yeah.
It's definitely suggested that this could be a really rich system in the area. 2025, talked about the exploration, you touched on that, that's going to be a part of it. What else can we expect from Lawyers Ranch in 2025?
Yeah, exactly. I mean, 2024, great year for us. I think we're just going to continue that on in 2025. We just started the PFS. That's going to be Asenco and Mining plus lead. So it's a really strong group that can work through the PFS, but also has the potential to take this through to production with us. And then the next hurdle, I guess, the next step is really beginning the EIA process, beginning the permitting, and that probably be kind of April, May timeframe that we launch on that with an initial project description, and then that'll feed into kind of step 3, I guess, which would be a significant exploration program again this summer on the ranch project.
Right. Well, I think that's a really good summary of what Laura's Ranch has to offer, the size, the location. Actually, location is something we should touch on because usually when you say BC and you talk gold or precious metals, your mind immediately goes to the Golden Triangle.
Yeah.
Toodoggone is very much not the Golden Triangle. Tell us more about Toodoggone and why, or the advantages of it versus some of these harder places like the Golden Triangle.
Yeah, I mean, I think in my mind there's 2 kind of key advantages to the Toodoggone, kind of north central British Columbia. One is that we're probably 300 kilometers inland from the coast, and what that, everybody's perception is exactly as you said. You go to Golden Triangle and you're thinking rugged mountains, glaciers, 30 feet of snow a year. We don't have any of that. I mean, we've got subalpine to alpine plateaus that are essentially flat with broad rolling valleys between them. It's just very easy to move around. It's very easy to build things. There's a lot of flexibility for tailings, for construction from the mill. We're not space constrained, basically. And on top of that, I think last year on the ground through the winter there was only 50 centimeters of snow. So operating an open pit mine in that environment, again, is just very simple. And then the second thing is, because it's a brownfield development site, I mean, there was an active mine on the project from the late 80s through the early 90s, and all that sort of the mill and everything has been removed, but the road infrastructure, the bridges, all of that remains. So and there's a power line tie-in just 45 kilometers to the south of us. So it's a brownfield development site from an infrastructure standpoint. It's pretty turnkey.
Right.
So very, very straightforward part of BC to operate in.
Oh, that's excellent. You guys check all the boxes as far as I'm concerned, and especially in this rising gold price environment, I think, especially with your evaluation, when you compare that to your potential NPV at today's gold prices, like, to me, it becomes quite clear what the opportunity is. Thank you very much for presenting with me this week, and I look forward to 2025 and the share price getting back up to where it should be.
Great, thanks, Brian. Pleasure to be here, and thanks for having me.